IAS 16 looks at property, plant and equipment. So it's looking at the tangible, non-current assets of a business, the things that will be used for the production of goods or services or for administrative purposes in the business. There's a big list of items that can be included in the cost of those assets, but really it's the directly attributable costs in getting the asset into its working condition and the location so it's ready for use. And those costs have been the same for many years, but there's been one recent change. It's a small change, but previously any proceeds from selling samples while you were testing the machinery, for example, they will be netted off the cost of that asset, whereas now they're actually included in revenue. Once you've assessed the cost of the asset, you then have to look at the subsequent measurement of the asset. And the first element is depreciation. Now, companies can decide the method of depreciation, whether that's straight line, diminishing balance, or units of production, but they really have to then decide the useful life. And that's a judgment that can have significant impacts on the profit of a business. Recently, Microsoft extended the useful life of its network assets from 2 years to 4 years, and it increased their profit by $2.7 billion. So the judgment of a useful life of an asset can have a dramatic impact on the profitability of that business. The other judgment that's there is firms can choose whether to revalue their assets or not. If they are choosing to revalue their assets, they have to revalue the entire class of those assets. This is common within land and buildings, and it means that you can't just pick one item of property that might have gone up in value in a big city centre and ignore maybe some of the warehouses or maybe some properties in less desirable areas. You have to revalue the entire class, and that means if some go up and some go down, so be it. Now, those gains on revaluation are not recorded in the profit or loss, they're recorded in other comprehensive income because really a firm's not made that profit until they sell that asset. So those judgments are there to really look at what is given the fairest presentation for the user. Is it to show the asset at market value, or is it to leave it at cost and really look at the life of those assets?